Hello everyone, warm welcome to Textbook Super Coaching Regulatory Bodies YouTube channel. My name is Madhav Arora. I welcome you all in a very important and your favorite session where we discuss the RBI updates on regular basis. This session is live every Wednesday at 6 p.m. where we discuss all the important RBI updates related to the past 1 week, which include first one, the RBI latest notifications, RBI press release, RBI speeches, as well as it includes the reports which have been presented by RBI over the period of time. So let's get started without any further delay. So first of all, before I start this discussion, I have a very important update to make, and the update is this is not the only session with the help of which you can cover your current affairs. You can cover your current affairs on daily basis at 6 p.m. on this particular channel where we give you weekly PIB analysis, weekly finance on Tuesday. Today it's RBI day. So this is Wednesday, weekly RBI updates. Then we have government schemes, ESI updates, as well as finally on Saturday, we have the important reports and indices. Let's get started. So today, the agenda of this session is to discuss a very important aspect, and that is the RBI monetary policy meeting, which was held on 9th of October 2024. From this, you can judge very well that how fast, how updated this session is. The news was out in the morning, and today, right now, we are discussing the same news in much detail. Now, first of all, what is monetary policy? So monetary policy is a policy which helps RBI to control the inflation rates of the country. Sir, inflation is calculated with the help of WPI as well as CPI. Which kind of inflation is targeted by Monetary Policy Committee? So Monetary Policy Committee targets CPI combined. The data of CPI combined is published on monthly basis by CSO, that is Central Statistical Office, which is operating under the Ministry of Stats, and this particular update is really very important for RBI because RBI has a target to achieve the inflation rates within a control range, and the control range is 4% plus minus 2%, which means the CPI combined inflation rates should be in a range of 2 to 6%. Now, the question over here is, sir, what are the updates related to the current monetary policy? Before I discuss the updates related to the current monetary policy, you must understand one point very clearly, that Monetary Policy Committee discuss and finalize the rates, which we call them as policy rates, which include repo rate, reverse repo rate. Along with that, we have MSF, SDF, and bank rate. Not only the rates, and number of other instruments are available with Monetary Policy Committee so that they can control the inflation rate. Today's meeting was really very important. And why this meeting was important? So it was important because of three reasons. First reason of importance of this particular meeting is that this is the first meeting where we have three new external members in the Monetary Policy Committee. Obviously, I will be discussing the names of those members, how their appointment has been done, who all have been replaced. I will be discussing that, don't worry. But first thing, why it is important? Because it was the first meeting of the newly appointed three external members of Monetary Policy Committee. Secondly, why this meeting is important, why this meeting was important, because as we have seen, many of the central banks all around the globe, they are decreasing their policy rates in order to increase the flow of funds in the economy so that the growth rates can be achieved, or targeted growth rates can be achieved, and the same pressure was aligned on RBI as well. But now the question is whether RBI has changed its rates or not, and if RBI has not changed its rates, what are the, I would say, reasoning given by RBI or the Monetary Policy Committee for not revising the rates, that we will be discussing. Secondly, this meeting importance is also related because of the upcoming festive season in India. We are in the onset of festive season where Navratras are going on, and in the coming days or in the coming months, we know we will be witnessing a number of festivals, and festival marks increase in demand, and increase in demand obviously impacts the inflation. So keeping all these points in mind, today's meeting was really very important, and due to which it has been seen, it has been watched out by most of the economists out there. And if you are preparing for RBI exam, this meeting, or I would say the important points of this meeting, are important for you as well. So let's get started. The first point from where I'll start my discussion is RBI Monetary Policy Committee, obviously, which is chaired by Governor, and the name is Shaktikanta Dasji. We all know that Shaktikanta Dasji is the 25th governor of RBI, and he is serving his second term as RBI governor. He was first appointed in 2018, completed his first term in 2021, then reappointed from 2021 to 2024. Now, in this meeting, the first point which is important for you all is Shaktikanta Dasji has announced that our policy stance has now moved from accommodative to neutral. What does it mean? It means earlier we were at accommodative stance, but now we are moving towards the neutral stance, which means we are not changing the rates of monetary policy, or we are not changing our rates because of a very simple reason, and the simple reason is our economy is doing pretty well. So due to which we are not going to change the rates. We don't want to increase or decrease the flow of money supply. We will be going with a neutral format where we are trying to witness the inflation rates within the control range. So keeping this point in mind, they have very clearly mentioned that the policy rates are not going to change. And the moment I say policy rate generally refers to repo rate. Repo rate stands for repurchasing agreement, and it was and it is still maintained at a same value, and the value over here is 6.5%. This is the rate at which banks, they borrow from RBI, and government also borrow from RBI for short term, and this is the rate which decides, or which is the parameter to decide the other rates as well. For example, we have bank rate, MSF or SDF, and reverse repo rate. So they have maintained the rate same at 6.5%. If it is same, then obviously standing deposit facility has maintained to 6.25%, which is unchanged, and MSF is again unchanged at 6.75%. I will be discussing about them in much detail. But whenever Monetary Policy Committee takes a decision, this decision is taken by a medium of voting. If we have Monetary Policy Committee, we have 6 members in it, and in this particular committee, these six members, they are responsible to decide the rates. And once the rates are finalized, then the voting is done. And if majority is achieved, that means out of 6, if 4 individuals are in favor, then that particular, I would say, decision will be implemented, and those rates will be implemented. Recently, out of 6, 5 members are in favor that we should move our accommodative stance to neutral, and we should keep the rates unchanged. That is, repo rate should be maintained at same rate, that is 6.5%. Now, there is a question, sir, who is the one person who is not aligned with the rest of the 5 members? I will be discussing that, and you will be shocked to know that he is the newly appointed eminent economist in the Monetary Policy Committee, and he was the one who was demanding that we should decrease the repo rate in order to align our policy with the global rates, or with the global central bank rates which are going on. Now, the next point is central bank has maintained the steady rates. So these rates have been maintained same at 6.5%, and for the 10th consecutive meeting since its last hike in February 2023. So the last hike was witnessed in February 2023, which makes all around 20 months, I would say. So all around 20 months, the rates have been fixed the same, because we know that Monetary Policy Committee meeting is conducted on bi-monthly basis. So if it is the 10th consecutive year, or the 10th consecutive meeting where the rates have not been changed, that means from around last 20 months rates have been fixed by RBI. These decisions which have been taken by RBI, it is because RBI want to achieve the control inflation rate of the country, which is in a band 4% plus minus 2%, which means 2 to 6%, as it is clearly mentioned on the screen. Now, if I talk about the key decisions, as I mentioned, repo rate is fixed or it has not changed. It is still the same, 6.5%. Sir, what is standing deposit facility? What is repo rate? If I talk about repo rate, repurchasing agreement, it basically means a bank as well as government can borrow from RBI against the government securities. And this rate is a repurchasing agreement, which means in very simple terms, I'm giving you the security and I will be purchasing back the same security on the repayment of principal as well as interest, due to which we call it as repurchasing agreement. Standing deposit facility. So standing deposit facility is an alternative of reverse repo rate, where banks, if they have surplus funds, they can park their surplus funds with RBI, and RBI used to park its government securities with the bank, but that rate is pretty low. It's 3.35% right now. There is an alternative, and the alternative is standing deposit facility, where banks, they can park their surplus funds with RBI, but RBI will not provide any security against those funds, but RBI will compensate with high return, that is 6.25%, which we call it as standing deposit facility. Then we have margin standing facility. So what is margin standing facility? We all know that banks, they can borrow against repo rate, or the borrowing can be done at repo rate, but there are certain conditions, there are certain limits which are fixed, which depends upon the NDTL value of the bank. And if bank is not in a position, or bank has achieved or overachieved its repo rate borrowing limit, then bank can go for margin standing facility, where bank can borrow from RBI without parking any kind of security. On the other side, bank rate is a long-term borrowing which is done from the bank, which is done from RBI. Long-term means, if I talk about repo rate, it is short-term. When we say the short-term generally means less than 1 year, and long term means greater than 1 year. But over here, if we talk about repo rate and all, in this case, short term stands for even an overnight time. That means for a day or 2 days or 3 days, where we have repo rate, then we have term repo as well. But in case of bank rate, this is the rate at which banks can borrow from RBI at for long term. Then, as I said, from accommodative stance, now government or RBI has shifted its stance to neutral, which I have already explained you few minutes back. Moving on to the next point. See, whenever RBI monetary policy is presented, along with the monetary policy, some other areas are also discussed. What are those areas? The most important part is growth projection. The most important part is growth projection. So Reserve Bank of India has maintained its GDP growth forecast for the financial year 25 at 7.2%. That means for the financial year 2024-25, RBI is expecting that Indian GDP will grow at a rate of 7.2%. So this is a must remember data, because direct question can easily be asked in your examination. The question is, according to RBI, what is the GDP projection for India for 2024-25? Then your answer is going to be 7.2%. RBI's growth and inflation outlook highlights global resilience as well as global geopolitical risk. Why I'm talking about this? Because we were expecting that RBI will align its rates with the other nations, with the other countries' central bank, where RBI will also decrease its policy rate, and to ease out the credit, or to, I would say, make the credit borrowing cheaper in the economy. But unfortunately, RBI has not done that. India has witnessed a growth of 6.7% in the first quarter of 2024-25, which is majorly driven by the private consumption as well as the investment done. So if someone asks you, in the first quarter of financial year 2024-25, what is the GDP growth? So it is 6.7%. But if I talk about the entire financial year expectations, the entire financial year estimates are 7.2% as presented by RBI in its latest monetary policy. Moving on to the next point. Sir, RBI has said that why we are not changing the rates. The reason is very simple, that if we are decreasing our rates today, it will result in increase it will result in decrease in lending rates. Decrease in lending rates will result in cheaper credit availability. Cheap credit availability will result in increase in money supply in the market, and increase in money supply in the market will result in increase in inflation rates. But on the other side, it is not required. Why it is not required? Because this year we have witnessed strong rainfall. We are witnessing steady manufacturing and robust service sector, which will undoubtedly support our growth. It will undoubtedly support the increase in demand in the market. So agriculture sector is going to witness a boost because of obviously I would say good output. And why we are expecting good output from the agriculture sector? Because of the good rainfall. So if we are expecting that agriculture sector will boost, that means already due to increase in agriculture production, demand demand will increase in the market. That will result in increase in inflation. So in order to avoid extra increase in inflation by decreasing the policy rates, this decision has been taken by RBI that we won't be changing our rates. We will be maintaining the rates same, that is 6.5%, because over the period of time demand is going to increase, which will help us to achieve our GDP growth estimates, and it will help us to stay or to maintain our inflation rates within the control range. But what if RBI decreases its rates? Then inflation is naturally increasing, but this factor will boost the inflation more, and it may cross or it may increase above the required level. That is the statement given by RBI. Not only this, RBI said that we are ahead of festival season. We have witnessed healthy Kharif sowing, which will further strengthen the private consumption. And if the private consumption is high, it will result in increase in more demand, more money supply in the market, and inflation rates are expected to increase. Along with that, RBI has given a statement that investment is backed by strong bank credit, high capacity utilization, and government infrastructure spending. So external demand is also set to improve with the global trade. So as per the current scenario, even if we are not increasing the rates, or not even if we are not decreasing the rates, then also in that situation we are in a perfect situation where the money demand will increase, and due to increase in money demand, we will be witnessing increase in inflation rates. GDP growth forecast shows steady figures across quarters, where we have witnessed second quarter we are witnessing 7%, third quarter we are expecting 7.4%, in the fourth quarter again we are expecting 7.4%, and overall we are expecting a GDP growth of 7.2% for the financial year 2024-25 as per RBI. For the financial year 2024-25 as per RBI. Now, let's talk about the inflation. Sir, if I talk about the inflation rates, headline inflation. What is headline inflation? So, the inflation, which in very simple terms, I would say, in a layman term, I would say, headline inflation means the inflation which remains in headline. That means the inflation which is majorly looked upon. The inflation which is majorly looked upon, and in this case I would say earlier it was WPI, but now headline inflation is CPI combined inflation rates, and these inflation rates have declined to 3.6% in July, 3.7% in August, which is down in comparison to 5.1% in the month of June. So in this month of September, we are expecting that inflation will increase because of the adverse, I would say, base effect in comparison to September 2024. And secondly, there is an expectation of increase in inflation rate because of increase in food prices. But still, if we are right now around 3.7%, if it increases, it will go around 4%, which is the most appropriate inflation rate which we expect for an economy. Food inflation is projected to ease in the fourth quarter, but in the second and third quarter, we are expecting high food inflation rates, which will increase the overall inflation rates of the country. This is the projection for the quarterly inflation rate. Second quarter, we are expecting 4.1%. Third quarter, we are expecting 4.8%. And in the first quarter of 2025-26, it is expected to be around 4.3%. If the inflation rates are close to 4%, that means the nation is stable, or I would say the inflation rates of the country are stable and they are within the control range we are looking forward for. Now, sir, what are the reasons why RBI has not changed its policy rates? As I have given you a number of reasons, now I will be concluding them in a while. As we know that in the upcoming months, we are expecting increase in domestic consumption, increase in domestic demand, increase in private consumption, which will undoubtedly increase the money supply in the market, which will undoubtedly increase the inflation rates in the market, and those inflation rates will be close to our best bet, that is 4%. So if everything is going to be done automatically, then what is the need of decreasing the policy rates? Because if we decrease the policy rates, then these inflation rates, which we are expecting around 4%, they may jump to 4.5 or 5 or 5.5%, which is not acceptable. Which is not acceptable. The next point is Monetary Policy Committee Monetary Policy Committee has witnessed that there is a long-term price stability, and in order to achieve long-term price stability with a sustained high growth, this is a perfect move which can be taken. Now, if I talk about the voting results, as I mentioned in the starting, that out of 6, 5 members were in the favor, but 1 member was not in the favor, then my answer is all the newly appointed members, as well as we have the existing Monetary Policy Committee members. If I talk about them, as you can see, the 5 members were in favor, but one of the newly appointed member, Dr. Nagesh Kumar, he voted to decrease the policy rate by 25 basis point. That means I was demanding that we should decrease the policy rate, that is repo rate, from 6.5 to 6.25%. But obviously majority wins, so 5 members were in favor to maintain the same rate, and the decision was taken accordingly. Now the next Monetary Policy Committee meeting is going to be held in December. That will be the 5th monetary policy meeting of the current financial year, and in that we may expect that RBI decrease its policy rates if it will be required. But one thing has been made clear: from accommodation stance we have come up to a neutral stance that has been announced in the current monetary policy. Now, I have discussed this term n number of times, that 3 new members have been appointed. Who are these 3 new members? Who appoint them? What is the actual structure of the Monetary Policy Committee? So please pay attention. Monetary Policy Committee was introduced on the recommendation made by Urjit Patel Committee, and on the recommendation made by Urjit Patel Committee, Monetary Policy Committee came into existence. So Monetary Policy Committee has been written under, or has been mentioned under, section 45ZB of RBI Act 1934 where Monetary Policy Committee comprises of 3 members, which we call them as RBI. 3 members, we call them as RBI officials, and 3 are eminent economists. These eminent economists, they are appointed by a committee which is headed by Cabinet Secretary of the country, and this appointment is done for 4 years, and the latest appointment has been done in October 2024. The 3 members which are from RBI, first one is Governor. He is the ex officio chairman of this committee, which means whosoever is the governor of RBI will be the ex officio chairman of Monetary Policy Committee. Then we have one of the deputy governor, the one who looks after the Monetary Policy Committee, and right now we have MD Patra. MD Patra was appointed back in 2020, in January 2020, and since then he has been serving as the member of Monetary Policy Committee. And then we have Executive Director. Currently Rajiv Ranjan is the one who is one of the member of RBI Monetary Policy, and he is one of the RBI official who is the member of this particular committee. The 3 new members who have been added: Ram Singh, Sogupta, Sugata Bhattacharya and Nagesh Kumar are the 3 newly appointed external members to this particular committee. They have replaced whom? So they have replaced Ashima Goyal ji, They were appointed back in 2020 and they have served for 4 years till 2024. Ashima Goel. Along with her, we have Jayant Verma and then we have Shashank Bhide. So these three names have been replaced by the above three names. The above three names are new members are Ram Singh, Sugata Bhattacharya, and the third name is Nagesh Kumar, and he's the one who was not in favor of maintaining the same monetary policy rates in the current policy which has been presented. Ram Singh, he is the director of Delhi School of Economics, University of Delhi. Dr. Nagesh Kumar is the director and chief executive of Institute of Studies in the Industrial Development, which is again in India. Sugata Bhattacharya, he is regarded as one of the finest economists of the country. He is the former senior vice president and chief economist at Axis Bank. So these are the three members. The appointment is done for 4 years. That means they will be serving as the member of Monetary Policy Committee from 2024 to 28. Now, the decision comes against the backdrop of a shift in global central bank policy that I was mentioning. What I was trying to mention is that on one side, Federal Bank has decreased its policy rates, and central bank has also, if I talk about the Federal Bank, it has also decreased its policy rate for the very first time since 2020, which is making up or bringing up a call that RBI should also decrease its rate. But on the other side, we have an entry of three new members. Then it was quite expected that the decisions will remain in line with the ongoing thought process of the Monetary Policy Committee. So as I mentioned, three members, these are the internal and external members. If I talk about the selection committee, who selects the three external members include the RBI governor, it includes the cabinet secretary TV Somanathan and economic affairs secretary Ajay Seth across the committee which chooses the monetary policy committee members, that is the external members, but the final approval comes from Prime Minister of India, and right now three new members have been appointed. Is it clear, everyone? So what is monetary policy? Why this time monetary policy has maintained its rates same or unchanged? What name the three new members of Monetary Policy Committee, how they are appointed, for what term they are appointed, all these points are clear. I would like to add few more points related to Monetary Policy Committee. The first point will be Monetary Policy Committee is responsible to meet at least 4 times in a year. That means they should conduct 4 formal meetings in a year. In order to conduct a formal meet, at least 4 out of 6 members should be present in the meeting. In order to take the decision, majority is required. At least 4 members out of 6 should be in favor. And lastly, after presenting the Monetary Policy Committee on fortnight, that means after 14 days, a detailed statement will be given by the members of the Monetary Policy Committee so that you and me, public, can understand in detail why these rates have been fixed, why these rates have been unchanged. All the answers will be made on fortnight basis. That means today it's 9th of October. Then after 14 days, we can expect the statement which will be given. Even this statement is aligned to come up with inflation targets, which we call it as monetary policy report, and the inflation targets which are included under the monetary policy report. In that particular report, committee gives the expectations for next 12 to 18 months, what is going to be the inflation rates of the country, and they will even justify why the inflation rates in the country were so percent in the past months. So this is how the Monetary Policy Committee works, and I have given you its validation, its inclusion when it was set up, and with the recommendation of Urjit Patel Committee, Monetary Policy Committee was introduced. So if you want to learn more about all these things, if you want to understand the concepts in much detail, then I would request you to enroll yourself in a Lakshya batch and use a code MADHAV in order to enjoy maximum discount. In this Lakshya batch, we'll provide you with structured live sessions for current affairs, for ESI, finance, management, paper 1, all subjects. Along with that, we'll provide you with concise, up-to-date and the most appropriate study material even will provide you with the mock test where you can practice not only for phase 1 but also for phase 2 in the same manner the way you are going to write your final examination. So that will be all from my side, guys, in this particular session. We'll be catching you all in the upcoming sessions to go. You can download the PDF of this particular session from the Telegram channel link which is given below. So you can scan the code. My handle is @Madhav Arora. You can type economics by Madhav Arora in order to download the PDF which I have used in this particular session. Hope you must have enjoyed the discussion. You must have got to know many new things in this particular session related to monetary policy. I will be catching you all in the next session where we will be discussing more current updates related to RBI. Thank you so much. Good luck. God bless you all.